Good evening, everyone. Welcome to today's webinar, Career Insights into Family Offices in India, hosted by CFA Institute and CFA Society India. I would like to take a moment to welcome our audience from around the world joining us remotely. I am Rajendra Kalur, CFA, Independent Consultant and Director on the Board of CFA Society India, and I'll be the moderator for today's webinar. Before I introduce our speaker, I have a couple of housekeeping notes to announce. Today's webinar is scheduled for 60 minutes, including Q&A, 45 minutes presentation, and last 15 minutes for Q&A session. Please feel free to submit your questions throughout the presentation. You can do so by clicking on the Q&A link. Please note it's the Q&A link and not the chat box at the bottom of your viewer and typing your question in the box. The link to the webinar presentation will be available to view after the presentation concludes in the chat box. We value your feedback, so please complete the evaluation survey before you sign off today. Now it's my pleasure to introduce our speaker for today's webinar, Nitai Utkarsh. Nitai comes with a lot of experience in having been part of wealth management, multi-family office, and single family office. And I am sure that in this presentation today, you'll be able to offer you the unique facets of each one of those. Nitai is currently lead investment strategy and chairman's family office, Hero Motorcorp. Nitai is a financial services professional with deep expertise in the family office and investment advisory space. Nitai has been exposed to different asset classes and markets globally, giving him years of rich experience and an extensive network. Over time, as a part of private banks and institutional and boutique multi and single family offices, Nitai has worked closely with ultra high net worth families and corporate treasuries, as well as highly placed professionals and entrepreneurs. He was one of the first professionals to work on the multi-family office concept in India. Nitai was key to developing and executing the first commercial launch of an MFO offering, that is multi-family office offering in the country. In the process, he also founded and managed an exclusive team of portfolio analytics specialists to advise MFOs. Nitai's expertise lies in solving complex structural issues related to family governance, global wealth preservation, and transmission, and also in implementing portfolio risk-reward optimization techniques. Nitai holds a degree in engineering from one of the IITs and an MBA from the Indian Institute of Management. Over to you, Nitai.
Thank you. Thank you so much, Raj. And thanks to CFA Society India for this opportunity to present career insights into family offices in India. And thank you to all the attendees and participants of this webinar. I hope that we can add some value and some insights into the family office space, which is quite nascent as yet in India. So, you know, let's look at a bird's eye view and who really needs a family office. So there are two types of people who would probably need a family office. There would be the wealth inheritors and there would be the wealth acquirers. So as the term indicates, wealth inheritor would be somebody who will be multi-generational wealth owner. There will be a legacy associated with the family, with the kind of wealth that is there. There will be different challenges in terms of not just managing money, but also in terms of managing the kind of class and you know, how do you further the family legacy. Most of the wealth that is inherited, there are families which build further on it, and then there are some who squander it away. So the purpose of a family office or purpose of creating a family office would be to ensure that the inherited wealth is A, preserved, and B, it grows in terms of the objectives of the family, and more than the wealth, the legacy is preserved and the legacy is transferred to the next generation. On the other side, there would be the wealth acquirers, who would be people who would acquire new wealth. And most of India's wealthy would fall in that category, India being a developed economy. As we go along, there will be more and more wealth acquirers in India rather than the inheritors. And the typical thing about these wealth acquirers is that they would have undergone some transition socioeconomically. They would have made their money most likely through an entrepreneurial venture. And they would be people who would really back entrepreneurs, who will back creating new businesses, who will try and integrate the entire wealth that they have created into their own identity. And they will be people who will try and create a legacy. So their problems are creating the legacy rather than just transferring it. So different sets of problems, but probably a similar solution, which is to create a family office setup. Now, how do you really go about it, or what do you really think of when you are looking at creating a family office? So it could be a liquidity event which needs some strategic deployment of wealth, along with a consolidated picture of what is happening with the assets. It could be a complex family, large size, multiple branches, a huge wealth portfolio, where you need advice not just to manage the money, but to also ensure that there is continuity both in business and in terms of how the wealth is transferred to the next generation. Who gets the money? How much do they get? When do they get it? So all these kind of questions become important. Then there are some global trends which are actually becoming very popular. A lot of second generation or the next generation of large families in India is coming back after having studied from the West, and they have looked at how unbiased advisors have helped families create institutions in the form of family offices. So what kind of parameters become more important for the heads of these families as they retire and as they try and transmit their wealth and transmit their family legacy to the next generation? So these advisors have done that very successfully globally. And a lot of the next generation has seen that happen, and they come back and they believe that they can create a similar infrastructure in India. And then, of course, there are a lot of non-investment risks because personal and professional wealth often gets mixed together. There are a lot of legal claims. There are a lot of conflicts which are related to the business, which often get transferred to the family. So how do you really separate that? How do you really ensure that you can isolate your family, you can safeguard your family from the risk that you're running in the business that you have? So all these are parameters which go through the heads of families as they think about a family office. Now, a lot of times people, feel, or people are not able to differentiate between wealth management and family office, and they often feel that there is not too much of a difference, but actually it's kind of a need hierarchy, right? You start with the investment advisory where you're only focused on getting advice on the investment part of your portfolio. And then you look at probably an overall financial advisory where you're looking at getting advice not just on your investments, but maybe on your business, on how do you really grow that, what are the other aspects of your financial planning. So all those become a part of a more comprehensive financial advisory platform. You add some bit more and you get into a wealth management practice where you maybe look at some sort of tax advice. You also look at some sort of product expertise and not just on the side of investments, but also in terms of, say, some legal advice, some investment banking mandates. So a wealth manager will probably have a more or an even more spread out view as compared to a financial advisor. And then when you move to a family office setup, you're looking at predominantly four main points there, and which is something that encapsulates everything that a wealth manager or a financial advisor or an investment advisor does. So there is financial planning where you talk about investment management, all sorts of compliances, transactions, bookkeeping, looking at impact and the kind of philanthropic activities that the family wants to do. Then there is basic advisory where you look at the risk management piece of it, maybe insurance for the family, for the house, for the estate. You talk about the cash flows and budgeting for the family, tax and legal issues. There are strategic aspects to how you really build everything together. So right from planning the wealth transfer through, say, a will or a trust, looking at consolidating the entire estate, ensuring that there is continuity not just in the family, but also in the business. There is training and education that happens for the family members. If there is advice needed on the business itself, on growing the business, on mergers and acquisitions, on maybe founding new ventures. So all of that becomes part of the strategy that the family office helps with. And of course, there is the governance where you create or you give shape to the family values through a family constitution or a family charter, where you talk about what is it that the family wants to do, what is it the family doesn't want to do, how do you really put it down on paper in terms of what the family's vision is, what its mission is, what are the various ways in which it will execute that. Are there any administrative services that the family needs? What kind of succession planning agreements, tools does the family need? So do they need to create a partnership? Do they need to create a trust? Do they need to register a will? What kind of reporting and record keeping happens to ensure that all the assets of the family are carefully looked at, they are consolidated, irrespective of the number of wealth managers who might be there in the picture, irrespective of the number of advisors who might be there in the picture. There is one consolidated record of everything that is happening with the family. So when we look at a family office, it's typically an advisor of advisors. So while you may have different advisors on the wealth side, on the financial planning side, on the tax side, on the legal side, on the estate planning side, on the training and education side, on the administrative services side, there may be multiple players that a large and complex family may be dealing with. But a family office typically acts as an intermediary between all these different service providers and the family, so as to give the family that sufficient bandwidth where they can really focus on what they are doing. They can focus on their lifestyle, they can focus on their business, they can focus on their professions, while all the matters of the family are dealt with by the family office in association with all the advisors of the family. So it really is a kind of a doorkeeper which ensures that there is family on one side and there are all these advisors on the other side, and they can really translate and execute work between the two. So how do these family offices really work, right? So there are single family offices, which are really meant for families that are really large in terms of the corpus that they have. They have a complex and often a sensitive structure which needs confidentiality. Justifiably, these are costly structures because you need to have your own team, which works only for a single family, and you need to keep them updated. You need to buy technology. You need to keep that updated. You need to ensure that the resources that you hire continue to stay with you. So all that makes this a costly affair. So this will really be useful for families who would have that kind of size and complexity to look at a single family office. For other families where they believe that while their piece is complex enough and their size is large enough, but they can really talk to some other like-minded families, maybe 3-4 other families, and share the cost of running the family office, they could opt for a private multi-family office where they are looking at common backgrounds and issues between these 3 or 4 families and sharing the cost and Obviously, maintaining confidentiality becomes very important, and the decisions of each family, even though they share a common background, could be very different. So the team which is doing this, or the family office team which is doing this, will have to keep that in mind. But there are a lot of examples where family offices start as a single family office, and as they grow, they realize that they can add maybe 3 or 4 other families and become a private multifamily office. Going one step further ahead, you have the boutique multifamily offices, which are larger outfits and yet boutique. So they will not really serve maybe 500 and 1,000 clients, but maybe 50 to 100 clients or 50 to 100 families is what they would serve. It would be a commercial service which will be offered to families. There will be templates, of course, because you need to cater to a large number of families, but then there will be a lot of customizations that will also be possible. This is akin to an outsourced CFO or a CIO model, which is becoming very popular globally, and a lot of business families are outsourcing parts of their family office management as well, even if not the entire family office. So they may keep some parts of the family office activities in-house, and they may outsource some other parts to, say, a boutique multifamily office. And finally, you have the large guys, the private banks and the institutional players who offer an institutional service to multiple families. Potentially, this could be infinite number of clients. While it is cookie cutter at the end of the day, but it could be marketed as something very exclusive. It has to be tech-enabled, because otherwise you'll not be able to reach so many clients and at least pretend to offer them very exclusive services, if not actually offer them exclusive services. So it's a tough ask for institutions to really offer a family office service, because as can be expected, large families can be very demanding in terms of the kind of customizations that they need. So while wealth management is something that an institutional player can very easily get into, to be able to run a family office service for institutions becomes very difficult. So often they end up acquiring a number of boutique MFOs operating in different markets, and thus becoming a large player, instead of offering a multifamily office service from the core institution, so to say. While the industry is nascent in India, there's still a lot of family offices which are already there. Obviously, single family offices, a lot of these you would have heard of. India is a country where a lot of businesses are family owned. A huge number, a huge percentage are family owned. And most of these family businesses have realized the need for creating a single family office. And like I said in the beginning, a lot of this need is dependent on the next generation coming back and finding the need to set up something like this, because they may not really be interested in just getting into the family business and continuing that. In all probability, they want to do something different. They want to do something more than what their parents have done. And for that, they need an institutional structure to ensure the continuity of wealth, so that they're not really bogged down by managing the family's affairs and the family's wealth. And they are therefore keen to look at a family office kind of a structure. So most of the large business families in India, if they already don't have a family office, they're definitely looking to set up a family office, which is a great opportunity for people who are looking at a career in this space. And because there are so many families who are looking at family office services, therefore, there are a lot of multifamily offices which have emerged. And unlike maybe 5, 6, 7 years ago, where there were maybe 2 or 3 people only who used to do this, today there are more than 10, 20 organizations which offer the family office services to multiple families, people or families who don't really need a single family office, because maybe they are not complex enough or they are not sizable enough, but still quite sizable for it to be a commercially viable business. So there are a lot of these multifamily offices who have come into the picture. A lot of foreign outfits which are investing in India. So a lot of family offices from outside India which are doing that. A lot of new wealth being created by the digital entrepreneurs, and I'm sure this is going to grow even larger. So those are the kind of people who are also setting up their own family offices. Obviously, their focus is often tends to be on creating new businesses or funding new businesses, funding new ventures rather than a typical family office construct. Their family offices are more about venture investing or venture creating. So different objectives, but then this is a new class of family office principles that's emerging as well. So what do these family principles expect from the family office? So there are some deliverables which are very tangible in nature. There are some deliverables which are not so tangible. So the tangible ones, obviously, like we spoke about a family charter, which is nothing but a family constitution, which really encompasses all the values that the family stands for and how those values are going to be preserved, how they're going to be passed along. So that's what a family charter looks at. A succession plan looks at both a business succession as well as the wealth succession for the family. So how does that happen? What's the kind of structure? Is it spread across geographies? Is it only for India? So all those questions come into picture. Excuse me. And then there is the investment policy, of course, because at the end of the day, one of the key elements of a family office is to manage the wealth that the family has. So, and the investment policy can be very comprehensive, right from starting with the constraints and preferences of the family in terms of investments and going down to mapping each of their goals and objectives to asset allocation profiles. It could be as detailed as figuring out the allocation to different market capitalizations within equity. It could be as detailed as going into fixed income and talking about the allocation ranges to specific kind of investment vehicles. Or it could be very fluid. So it really depends on the family which is looking at creating this investment policy. So I think for a CFA or a CFA candidate, I think this is something which is very relevant, and I'm sure this is a core of the curriculum as well. So this is something which is a core of the family office offering as well. So investment policy becomes very important. The business continuity planning is critical as well. So who does the business go to? Does it need to be a family member? Can it be a professional? If a family member wants to get into the business, what are the minimum qualifications that he or she must have? How many minimum number of years should he or she have worked for in the family business before getting into a leadership position? So all those factors become important. And ultimately, how do you really give back to society? A lot of families are very concerned about this aspect, about really sharing their wealth. And all of us know about a lot of families in India who are known to be very generous with the kind of wealth that they have created, and they work very hard on ensuring that whatever they have made, they're giving back to the society. So that becomes a very important deliverable as well. And this is not just it, because unlike wealth management or other parts of advice on investments or finance, like we said, the family office goes beyond that. A family office team is supposed to be an educator and mentor for the next generation. It is looked at to ensure financial security and continuity for the family. So they're really relied on to do that. So it's very important that there is very clear directive to all the members of the family office team that they have to keep everything very confidential. Everything has to be customized to the needs of the family. There has to be very strong alignment of interests between the family members and the family office staff. because unless that's there, it becomes very difficult to really bring out all these subjective parameters and be true to all these subjective parameters. And on top of everything else, while you're doing all this, you need to understand as a family office professional that you can't do everything yourself. You cannot be an expert in all aspects of the job, because a family office is supposed to help the family with everything under the sun. Your basic level of knowledge is critical in terms of being able to coordinate with service providers across the country and the world to ensure that whatever the family needs, you're able to get that sorted. Not necessarily that you are able to sort it yourself, but you are able to get it sorted through a panel of service providers, advisors, experts across different sectors and spaces. So what are the different services, or what are the different things, activities that a family office would do, and where do career movements or where do career opportunities come up, right? So obviously there is the entire investment space, which becomes very critical for a CFA charter holder or a CFA candidate, where you look at different activities, right from investment policy creation, selection of different managers who are going to manage the wealth of the family. How does the performance reporting happen? How does the benchmarking happen for the managers who are managing the wealth of the family? Who sources the deals? Who sources the investment ideas? How does that happen? And how do you really perform due diligence? How do you evaluate those investment deals? So this entire piece is obviously very critical to how a family office functions. And there are multiple careers to be made in this space. So that becomes a very important aspect. Then there are family office administration aspects, where right from the human resources bit of it to figuring out the things like insurance for the family, figuring out the management of risk, which could even be physical security, it could be financial risk, it could be any sort of risk that the family is facing. How does the family office itself work? So what's the organizational structure? Who's the CEO, CIO, CFO? Who are the people working under them? So all structuring of the office. How does the family get educated? And when I say education, it doesn't need to be only formal education that we're talking about here. It's about upskilling at regular times. Depends on what the next generation wants to do, and to be able to help them with that. A lot of financial management activities, from accounting, cash flow management, budgeting, and other financial controls. Technology becomes very critical. So right from the databases to the MIS and the platform, cybersecurity is a very critical area for large families, because all the information is very, very sensitive and confidential. So how do you ensure that there is enough security built in? How do you manage philanthropy? What are the kind of partners that you work with? How much freedom do you give them? What's the involvement of the family members in this aspect? Because a lot of family members want to be personally involved in this. What are the legal activities that are there, right from contract development to compliances, to managing any sort of litigations which are there in the family, to making legal structures, wills, trusts, partnership deeds, getting into signing investor agreements into ventures, funds, etc. Personal concierge. How does the personal estate of the family get managed? Who's the estate manager? Who are the cooks? Who's the personal secretary? A lot of things which really come into that. And overall, on the wealth planning aspects, tax, both in terms of planning and compliances, the continuity of the wealth and the business, and the overall investment structure. So a lot of activities that really create a family office, and therefore a lot of roles and careers which get created. And these are the design considerations that a family would look at in terms of whether to have a single family office or a multi-family office. Do you share that? What are the needs and objectives? So what services do you need from the family office? Can you really go with a new structure completely, or is it okay if you just rely on, say, a family business or foundation which already has a team which is doing similar activities? So can you just ask them to do this as well? So can you insource activities? Can you outsource a lot of them? Like we saw in the previous slide, there are some activities which can be insourced. There's some of them which have to be outsourced. What kind of talent pool do you need? What kind of compensation structures do you need for that? And then obviously you also need to plan about how things will change over a period of time. From wealth generation to wealth preservation, how do you really change or tweak the policies of your family office? So all these considerations are relevant and important. And when you're looking at a career in the family office space, you need to understand as to what are the answers to some of these questions for the family that you're considering to join. And have they really thought about all this? Because while it may be fashionable for a lot of families to create a family office setup, but from a career point of view and from a stability point of view, you would like to join somebody who's already looked at all these questions, who's already answered all these questions. So when you are in a job interview, you can even ask, these are the questions that you may want to ask the family in terms of, have they really thought about this? What are their opinions, views about all these aspects? And if you hear them say concrete things in answer, then you know that this is the kind of family office that you can work for. But if they're really unsure about a lot of this, then maybe they're just doing it because the peers have done it and they really haven't thought through setting up a family office. So these questions become important from that perspective. So typically, the structure that a family office has would be like this. There would be family principals, which would be the family itself, and there will be some trusted advisors that they may have, which could be extended family, which could be professional advisors that the family has worked with for a number of years. So they would really be advising them on all aspects, not just on the family office, but probably they could be personal advisors, they could be business advisors who the family principals trust. So those would be the starting point. And then the organization of the family office itself, where if it's a single family office, or even if it's a multi-family office, under the CEO, there would be somebody who would be looking at the operations piece, the financial piece, the investments, the legal, and the tax. Within the operations, you could be looking at physical asset management, so right from real estate to luxury items such as yachts and aeroplanes and whatnot. So it could be that. It could be simply records in MIS, execution of all the transactions, support and all the administration that the family needs. The financial officer will be looking at the overall accounts and bookkeeping, ensuring that the banking and cash flows are managed, executed on time. The legal person would be looking at compliances, could be looking at trusteeship and fiduciary responsibilities that the family office will have, would be looking at contracts. Then there would be the tax piece, which would be looking at all the tax issues, both personal as well as on the business side. Again, like I said, all these people need not be able to solve everything that's there. They would, in all probability, look at a support structure, internal or external, to be able to solve all this. There'll be asset managers, there'll be wealth managers, there'll be specialist legal tax and M&A firms. There would be trusteeship service providers who would really help them. And then, of course, there will be the investment piece, which is at the center of it all, where under a CIO, there would be people who will be leading private investments, public capital markets, alternatives, and maybe a global or an offshore kind of portfolio. Within private, it could be a fund of funds kind of an investment structure. It could be direct. It could be a combination of the two. Within public capital markets, there would be somebody who would be looking at fixed income, somebody would be looking at equities. So depending upon the size and the complexity of the family office and whether they are really making investments directly, or they're only allocating to asset managers, the number of people employed in the family office will vary. So there will be large family offices where you'll have all these roles filled in, each one with an individual. There'll be smaller ones where you'll only have the top tier and not, and they would be really responsible to handle all of the bottom pieces. So depending upon the size and the complexity, you will have a different number of people. But typically the organization will flow like this, and these will be the kind of career opportunities that you can really look at. So what are the kind of roles and what are the kind of skill sets that are there in the family office space? So there are the core functional roles. So the streams which I'm talking about are the ones which lead to the CEO, CIO, CFO, or CEO. So these are the functional roles where the important skill sets, apart from what you're looking at in terms of your expertise on investments, on portfolio planning, etc., is to be a big picture person, because here they're really looking at more of generalists who can really understand what the family needs and are able to translate that into a plan of action. You should have exposure across asset classes. If you are an equity specialist, you may not probably be the right person for this kind of a role. But maybe somebody who's a part of this team, yes, but maybe not at the level of a CEO or a CIO or a CFO or a CEO. You're looking at somebody who has investment analysis and portfolio management exposure. You're looking at somebody who has relationship skills, because a lot of times the behavioral piece becomes more important than actually the science and the math of it. So you need to understand why people take investment decisions when they take them. And a lot of times they're not rational, and you need to be able to understand that. So those are the kind of skill sets you need there. Then there is a whole set of support function roles. So on the legal, tax, HR, IT side, where of course you need to be a specialist, you need to have very high level of domain expertise. Confidentiality becomes very critical here, because a lot of these matters are very sensitive. So your integrity and character and ethics become very important. And ultimately, because you're going to be dealing with a lot of experts and external advisors, you need to be able to translate stuff, both complex things, you need to break it down, and simple things you'll probably need to translate into the language that's understood by experts. So you should have that flexibility and ability to do that. Then there will be some shared services roles, which are very, in terms of the skill sets, very similar to the core functional roles. But instead of joining a single family office, for example, if you're joining a multi-family office, which is in turn providing these shared services to a lot of families, then you'll fall into this category where you'll be an investment advisor or a tax advisor or a legal advisor or a shared CFO or a shared CIO for the family office. You need to obviously have the most important piece here is to be able to have a sharp focus on all the deliverables, because the reason why a family is looking to hire you or looking to share these things with you is because they need somebody who can really bring focus on what they need to do. So from a CFA charter or a CFA candidate point of view, these are some of the attributes which you are familiar with: ethics, investment analysis, portfolio management, wealth planning, valuation. And as you can see, these are some of the skill sets which are definitely needed in the kind of roles that are there in the family office there. Just a couple of examples, maybe on the chief executive officer and the chief investment officer. The typical kind of backgrounds for a CEO would be it's probably a known person who's been in the family business or foundation, or he's been a trusted advisor or a portfolio manager or a legal counsel. On the other hand, a CIO would probably be a portfolio manager at maybe an endowment or a hedge fund or a private equity fund, or maybe an investment counselor at a bank. For the CEO, the important piece to do is to manage and have oversight on all the activities and staff, continuously interact with the family, be able to understand what they need and execute their plan, where the CIO is really specifically focused on the portfolio, right from outlining the policy to the allocation to the process, looking at due diligence and monitoring of all the investments which are there. In terms of the kind of compensation that the CEO is typically offered is probably a base salary plus a lot of discretionary bonus. The base salaries are high and the bonuses are even higher in terms of, if you compare it to the other pieces of financial advisory, wealth management, etc., the discretionary bonuses are pretty high. There are often provided opportunities to co-invest in the family's portfolio so that there is alignment of interest. Similarly, for the CIO, there could be carry components, just like a private equity fund manager. There could be carry related to the performance of the portfolio. The bonuses are often metrics-based here, not necessarily discretionary. So that's really what the CIO does. Getting a little deeper into the compensation dynamics, there are different families who look at it differently, but the more mature family offices try and ensure that there is long-term alignment with the family office staff. So things like carry, co-investments, metrics-based bonus, all these become relevant for the staff of these kind of family offices, because this is what really aligns them to the overall family's future. And unlike a wealth management or financial advisory or an investment advisory kind of setup, these things are more common than just a base and a bonus, which could be discretionary or which could be metrics based. So here the carry co-investments and looking at it as a profit center are more relevant than just the base and the bonus. So that's really how the overall compensation works here. So that's really what I had to talk about. I'm just stopping the sharing, and Raj, handing it over to you for any questions, please.
Yeah, thanks, Nitai. That's really, really deep and very insightful. And once again, thanks for your time and taking pains to explain the various nuances of the family office structure and the services. Nitai, I just want to pick your brains. You are pretty articulate and quite, I think present in many of the speaker assignments, both here in India as well as abroad. I know for a fact that you also address the CFA charter holders audience at New York as well. So what do you think? I mean, you mentioned about the family office structure being at an early stage here. So what do you think? I mean, having studied abroad the family office structure as well. So where do you think the essential differences or commonalities exist?
So I think the differences really exist in the way family offices are seen by the family principals, because from an overall ecosystem point of view, I think there is a lot of clarity that the ecosystem has in terms of understanding the role of family offices. So when I say the ecosystem, asset managers, wealth managers, service providers, they understand the role of a family office pretty well. But the difference really is more from the perspective of how the family principals themselves look at a family office. Because the Indian families are used to their own versions of family office, right? So even in the past, during the age-old days of zamindari system, etc., there used to be these munis or estate managers who used to manage the affairs of the family. So a lot of Indian families, especially the wealth inheritors, come from that kind of a background. So to be able to see this as a professional organization, to be able to see this as a profit center, is still something which is not very easy for a lot of Indian families. Whereas if you go out west, whether it's Europe, whether it's the US, you see that the families there are really looking at family offices as a profit center and not really as a cost center. They're looking at family offices as an institution that they want to build, as a line of business that they are creating, right? So its relevance for them is much more marked than it is for Indian families. And I think over a period of time, as we move along and as there are more professionals who join this space, and people like CFAs, people with MBAs, and as more and more people like those join this space, I'm sure that that image in the mind of family principles will also change over time.
Yeah. So the question that, one of the questions from the audience here is, are there any regulatory or government permissions or licenses that are required to set up a family office, or you just set up as a simple entity?
So for a single family office, no, you don't really need any specific permission. But if you are really looking at a multi-family office kind of an offering, you obviously need to be registered with SEBI as an investment advisor, and you need to comply with all the regulations that SEBI has. Even in case of a single family office, at times, if you are really putting the single family office in a separate entity, and that's really advising the family, and there is a fee being paid to the single family office. So even in those cases, you have to comply with the SEBI regulations. But if it's an internal single family office, you don't really need any permission.
The other question is, you have really, drew up a fairly exhaustive slew of services. And that's really quite something, isn't it? When we look at family office and simplifying things, actually the structure sounds so very complex. So in India, typically, what has been the experience that you have seen? What are the kind of services that are typically on offer? And are they that exhaustive? How much of that is in-sourced and how much of it is outsourced?
So services, whether in India or outside, are necessarily the same. So all families, whether they are in India or outside, need all those services. But whether they outsource most of that, yes, they do. The single family offices which are there in India, maybe 100, 150 of them, are really looking at outsourcing a lot of it. There are very few single family offices which do everything in-house, and where they have the entire gamut of people within the single family office. But from a career point of view, all these activities are required to be performed, whether they are performed within the single family office or they're outsourced to multi-family offices. These are roles which are there in the ecosystem and which need to be filled in. So from a career point of view, yes, all these roles exist. They may not exist inside the single family office. They may exist somewhere else in the ecosystem, but they definitely exist.
Again, another interesting question is, all this could be, sounds very expensive as well. Do you think, what's the tipping point? At what level of wealth, or do you think is it really the requirement of complexity of service? So what's the balance there? And what's the kind of, you see from an Indian family office experience, the number of people working in a family office, single family office?
So typically Indian family offices are lean. So I haven't really seen, except for, like I said, maybe 5 or 10 family offices in the country. I haven't really seen more than 10 employees in a single family office. And that's also because we have a very rich ecosystem of service providers and advisors and experts. So it's easy for single family offices to outsource a lot of it to external providers. So therefore, honestly, more than 8 to 10 people or 8 to 10 staff, I think there'll be only 5 to 10 single family offices who would have that kind of a structure. In terms of the threshold, really, it's very subjective, because a lot of families may think that having 50 million corpus is good enough to have a single family office. A lot of people may feel that even a $200 million corpus can be outsourced to a multifamily office. But globally, the standard threshold or the standard number is really 100 million is the number. So anybody or any family who has more than $100 million of liquid assets to be managed typically opt for a single family office. But that really doesn't work so well in India, because in India, a lot of wealth is really tied into either promoter equity into family businesses or into real estate or other physical assets. So the liquid wealth, if one were to look at strictly that criteria, 100 million would be too high for Indian families. So Indian families typically employ a net worth kind of a criteria, and they look at maybe anywhere around a 200 to a $300 million of net worth as the criteria rather than a 100 million of liquid assets as the criteria, which is more a global kind of threshold.
Yeah, thanks for that answer. At the same time, I mean, let me just flip back to your experience as a multi-family office, career as well. And what do you think? I mean, what's been the experience of a multi-family office? It's new in concept. In your list also, what you've drawn, there are not too many, I believe. And in that sense, where are they in terms of maturity? And what needs to be done to give a boost to a multi-family office, because we have a fairly good spectrum of wealth managers. So what does it take for a wealth manager to graduate into a multi-family office?
I think what it takes is intent, really, and a lot of it is now being driven by the regulator as well, because as the regulator talks about creating the distinction between advisory and execution, a lot of wealth managers also are now looking at advisory as a separate line of business. And as they look at advisory, they realize that just wealth advisory is probably a very limited take or a limited view of the potential that exists. So as they look at wealth advisory, they also see the need to get into a more comprehensive family office advisory, and therefore look at creating a multi-family office offering. So the number of the number of multifamily offices that you see today in India, while they are low in number, but they're almost 5 or 6 times what they used to be, say about 3-4 years ago. So as we move along, every year we hear about 2 or 3 new entrants to this space. Although most of them have been boutique, most of them have been homegrown, entrepreneur-driven. Very few institutions have actually come out and actually gotten into doing this. But like I said, as the regulator forces them to look at an advisory line of business separately, I'm sure very soon they will try and expand this advisory from only wealth advisory to a more comprehensive family office advisory. And we'll see a lot of new career opportunities open up. We'll see a lot of new entrants come into this space very, very soon.
Great. And so let me, Jen, turn to your attention to a fresh CFA charter holder wanting to get into a career in family office. So, I mean, but from the chart that you have drawn up, typically, I think there is a very limited avenue for a fresher to come in directly into a family office. So what did you advise? A private bank or a wealth management? So what did you advise for somebody to get in, and then how does one plan the career path so that one gets drawn into a single family office?
So from an overall family office space, there are definitely career opportunities even for freshers. May not be there for a single family office, but if you look at multi-family offices, there are a lot of analyst level positions which exist because if they have to support multiple families and be the shared CIO for multiple families, they need to build their own expertise in terms of being able to evaluate different asset classes, being able to perform valuation exercises, being able to do portfolio management activities. So they need people across the different levels of experience and knowledge. So there are definitely a lot of openings there, analyst level openings in the multifamily offices. But like we just saw, the number of multifamily offices are not that large. So a good idea would be to get into a wealth management, if you're not able to get into a multifamily office, to get into a wealth management kind of an outfit, which is looking at creating an advisory business proposition. And today, almost everybody is doing that. So, so every wealth management outfit today in India would have 2 separate kind of lines of businesses. One would be purely advisory, and the other would be maybe on the execution, distribution kind of model. So to be careful when you're looking at such organizations to be a part of the advisory piece of their business rather than on the execution/distribution if you want to make a career in the family office space. And as you go along, you can probably try switching from there into a multi-family office outfit and ultimately into a single family office outfit. But yeah, I mean, directly getting into a single family office may be a tough task for a fresher, really.
Thanks, Nitai. One other question on the multi-family office again is, typically what is you mentioned about regulatory intent and also the intent of the promoter, etc. But what is typically the revenue model in a multi-family office, and how does that get scaled or profitable?
So normally, if you're really dealing with very large families, you are on a retainer. Because it becomes very difficult to put your revenue or mark your revenue to the assets. Because if the assets are extremely large, then the fee accordingly will become pretty large. So you really come on a retainer model. But if you are helping set up a relatively smaller family office for a family, you could also charge based on the kind of assets that the family has. And it could be a percentage of the assets of the family that you're helping the family manage. So it's again a very customized commercial structure that the multifamily offices operate with. There is no single kind of revenue stream. But what is important is for multifamily offices to make their money from only from the families and not really get into a distribution mode where they're looking at distributing products, because there is a clear conflict of interest. Because if you're really advising the family on their overall piece, then you need to be making your money only from the family and not from the various service providers or experts or other advisors or product manufacturers that you're dealing with. So it has to be that ethics has to be in place. Yeah, I mean, having said that, those are the two models where one is purely a retainer model and the other is where it's linked to the assets that you manage.
So as a recruiter, you'd be glad to know that CFA curriculum actually emphasizes quite a bit on ethics, and all the three levels you need to really score high on ethics to get the charter finally. So do you seek out or, CFA charter holders when you recruit, or would you attribute certain kind of skill sets unique to CFA charter holders, which hold some kind of an esteem in the organizations like family offices? So where does that come from?
No, absolutely. I think the core, and unlike any other industry, this industry, the core is really integrity of character and ethics, because you are managing somebody else's money and affairs, and that somebody is really relying on you to come good for him or her. The family is relying on you, and the position that the family office enjoys is that of trust. And if a wrong person gets into that position, there is a lot of misuse that he or she can end up doing. So for any position, and it's not just the CEO or the CIO or head position, but even the most junior staff who would be joining in as a recruiter, the first thing that I will need to know is the integrity of character and the ethics that that person brings to the table. And from that point of view, I'm fully aware that the CFA charter and the CFA curriculum puts a lot of emphasis on that, and therefore it becomes very relevant to us when we recruit for a position in the family office. And apart from that, the core skills that the curriculum teaches in terms of investment management, investment analysis, valuation, portfolio management. So all these are very critical areas when you're looking at the investments piece of the functioning of the family office. So definitely a CFA charter holder holds an ace, if I were to call it that, when it comes to family office positions.
Do you consider any other certification that is relevant for somebody planning out a career in family office?
So there is the CFP, which is relevant as well in some cases. The typical finance MBA, of course, becomes more of a hygiene qualification than an added piece. There are a lot of specific family office certifications which have now started in India, which were not there earlier because the industry is growing. So there are a lot of learning and development outfits which have started doing that. Although there is no standardized course yet, but I'm sure there is a lot of work that's happening on that side. So if somebody is really interested in this space, they can go and look out for that. And these are typically, either a 1 week or a 3-4 days kind of courses, which really give you insights into either the overall family office functioning or some specific aspects of it. So those are things that you can really go and look at if you want to really add to your candidature.
So some of the questions that have been raised here are on trends. So I will just shift away from the narrower focus into much broader one. So what do you see are the shifting trends in terms of asset allocation, and now with new asset classes emerging, and the other one is about impact investing. That's you mentioned about philanthropy. So impact investing too is becoming a big I think powerful investment strategy for family offices. So what do you see? I mean, where it started from in terms of the allocations, how is it going, and what do you think the future is unfolding? ESG is another trend as well that's coming in very powerful.
No, absolutely. Impact investing and ESG have become very relevant and very important, and not just in India, but globally. And as more and more millennials start taking over the reins of the family, the significance of ESG, the significance of impact investing goes even higher because as we have seen in all aspects of industry, millennials have a very sharp focus on these areas, and that is getting reflected in family office activities as well, family office investment approaches as well. Because when we go and talk to the family about investment ideas, most often the next generation would come back and ask us about, what is the impact that this investment can create in the society overall. And while earlier these could be just, questions which were, which probably would have been there for the effect, now they are actually serious questions with impact being measured, and not just impact not just being in the air in terms of, it's not abstract anymore. It's very measurable, and people are actually talking about the metrics of measuring impact, of measuring the success of ESG. So definitely very relevant. In terms of how the asset allocation process is moved, I think from a very generic asset allocation profiling based asset allocation, family offices have moved to a goal-oriented asset allocation, where we are talking about identifying goals for the family very clearly through a lot of subjective and objective methods, where you sit down and have a questionnaire, have a structured interview approach, and identify the objectives that the family has, talk to all the family members and figure out what are the areas of divergence, what are the areas of convergence of the objectives of the family. And then based on the goals that you've identified, you then create very specific asset allocation templates which are assigned to each goal. So if there is a goal where the family wants security, so there is an asset allocation which is 100% fixed income, very low duration risk, very high credit quality, that gets ascribed to that kind of a goal. If there is a growth objective where the family wants to really grow their wealth, then it's a more private equity, venture capital, infrastructure, that kind of an asset allocation that gets ascribed to that. If there is a lifestyle objective, then you look at a more balanced equity, fixed income, alternatives kind of an asset allocation for that. So I think that's the bigger shift which is happening, not just in India, but globally, where instead of looking at a single profile for the family or a single asset allocation for the portfolio, you're actually creating multiple portfolios, each portfolio being linked to a specific goal that the family has. And for each portfolio, you will really be looking at having a separate asset allocation plan, having a separate rebalancing process, having a separate monitoring process for the investments that are there in that portfolio. So each of these portfolios will be treated independent of the other. So I think that's a big change that's happening now.
So just let me pick your brains, as working very closely with the promoters in a single family office, one can get very close, but at the same time, there is a certain, I would say, boundary that needs to be kept very clearly. So where do you think one can get in, and where do you think one can step out? I mean, how difficult that role is, because there are, within families, we hear a lot of conflicts and others. And at the family office head level, does one really get involved in that? Or how does one resolve this? I mean, it's a pretty tricky thing, isn't it?
It is. It is a lot of nuances to that, and of course, you can't take sides, and you have to be the most neutral person around. And at the same time, you need to have an opinion. I mean, you can't really be just a doormat. So you need to have an opinion, but at the same time, that opinion has to be very well balanced and neutral, and visibly not really getting into one side or the other. Uh, and of course, there are boundaries, and as professionals, it's important to respect those boundaries. And because you're dealing directly with the promoters and with the heads of the family or with the heads of the business in a lot of cases, you also need to be aware of the kind of person that you are, or that you have the opportunity to be talking almost on a daily basis to. A lot of other people in your position or with your experience or at your age may not even be talking to the head of the business, but you are getting to talk to them on almost on a daily basis. So you should be mindful of that additional responsibility that's being placed on you. So that's why when I put down the list of skill sets, I think one of the most important skill sets is the ability to understand behaviors and the ability to be a relationship person in the true sense of the word, where you are able to really look at the smaller signs and figure out what your reaction should be. Again, no science to it. It's really something that will come with experience and working with people, because you can't really go to your HR and complain about your boss here, right? So you have to resolve your own issues.
Yeah, one last question, because we have completely run out of time, Nitai. But thanks, really, very, very useful session. This was very educational. But one last question: would you recommend any book on families and family offices that our audience can read and get more familiar with this concept?
Not really a book, but I think if you could get across the history of family offices and how they started, right from Rockefellers to Rothschilds, and how it's shaped up, and it's all available online. You could just go to Wikipedia and read about the Rockefellers. You could read about the Rothschilds and how they've started the concept of family office and where they are from then to now. I think it'll be a great learning about how a family office is supposed to function, and what are the things that can go wrong, what are the things that can go right. I think that's what I would recommend.
Thank you, Nitai, once again, really from the bottom of my heart, for the time that you spent on not just the presentation today, but the labor of love that you gave to the presentation that you prepared. I think that's been very insightful. At the same time, as a reminder to our listeners, please do complete the evaluation survey that has appeared on your screen at the end of the session. At CFA Institute and CFA Society India, members may claim professional learning credits by logging in their online professional learning tracking tool as well. And please do register on the upcoming webinars. On 9th September, we have another career insight. That's financial media in India. Speaker is Binoy Prabhakar. And on 23rd September 21, we have a practitioner's insight, valuing tech IPOs by Aviral Jain. But with this, we bring the session to a close. Once again, Nitai, thanks a lot. And thanks for the audience for your patience. And look forward to meeting you again in the next session. Thank you all.
Thank you. Thank you so much. Thanks for the opportunity.